Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, we have now moved from the June contract into the September contract for E-mini futures. For those of you that are new, I want to thank everybody who's joining us over on Reddit, everybody who's joining us over on the Princeton Trader Education private Facebook group. The role is just, it's an administrative function. So there are 4 contracts of S&P Futures every calendar year. And every 3 months, you close the old contract and everybody moves the volume of trading into the new contract. Okay? It's the same thing that happens with oil and gold and all the commodities that get traded on the exchanges. S&P is a derivative of the contract, and the big S&P contract is a derivative of the S&P 500 index. Minis is a smaller version of that that's more tradable, and micros is even more tradable than that. But every quarter, you move from the old contract into the new contract. So what you'll find yesterday, exchanges and bigger folks were trading. They always get traded, all of them. Going forward a little bit, not too far. But there's always a minimal amount of volume in the further out contracts, because most of the volume is in what they call the front month contract, which has been June. The new front month contract is now September. That started for some yesterday, for just about everybody today. And by Monday, everything front month wise, trading wise, will be in the September contract. So for example, yesterday in our chat room, we traded the June contract. So on Thursdays, we trade the June. Then after the close on Thursday, open into Friday. Today, we will be trading the September contract going forward until we get to September, when we will roll from the September contract into the December contract, and on and on and on. It's just an administrative function. There are people that spread trade between the two contracts. That's very advanced stuff. That's really not done as much as it was done 10, 20 years ago versus now. So the only thing you have to remember is the new front month contract is September, ESU 21, and that's, those are the prices that we're going to be talking about in this webcast and going forward. Okay? Any questions, you can always hit me up. YouTube, Facebook, anywhere. And for those of you that are members, we'll talk about it in the room like we do all the time. So they finally dealt with this 42.30 price on the June contract, which had been resistance for quite a few days, actually going back to June the 1st. They took it up to 49, but then what you saw over the balance of the day is they didn't do anything with it, they being the bulls. So here's an hourly. The 42.30 equivalent in the September contract is about 42.21, 42.22. You can see all the attempts and the inability to get through. Big spike down on PPI. The September price weekly pivot is 41.98.17. So you had the test here on Tuesday, the test again on Thursday, support in both situations. So PPI knocks it down, and then the bears basically, they get run over. They take it from September 41.97 quarter up to new all-time high 42.39 half, which was the 42.49 print in June yesterday. So we talked yesterday briefly about how old contracts that are getting retired, that are going to expire, they love to close them on the contract highs. New contract highs yesterday. So September starts with new contract highs. Then the rest of the day was really about a dip, a higher low, and then kind of grinding it back to the upside. So a lot more volatility than we've seen during this compression period, and some expansion. And now just kind of a grind in the overnight. You see the hourly mid-band, 42.31.65. That was support through the Europe Open. And we've seen a couple of attempted moves up towards the 42.39 area, and we'll see how it opens up today. Volume weighted average price, remember these are all September prices now, 42.32 and change. Hourly mid 31.66, Proprietary moving average 42.34. 5-minute mid 35 half. So it's a situation where we're flat right now. We had a really nice day in the room yesterday, about a 30 handle day, just doing a few trades, and we weren't involved in the CPI push down. It was just a really nice volatility day, nothing crazy, and the afternoon was pretty choppy. And what I said to everybody when we left yesterday was, yesterday was a day where both sides had tremendous opportunity to take control of the tape. The Bears had a chance to take control here off that 8:30 economic number. They couldn't do it. Less than an hour later, we were up at 42.39.5 on September, 42.49 on June. Had taken out that 42.30 problem area in the June contract by 20 handles, well 19. But you get my point. All the bulls did after that was a great big nothing burger. They gave it all back up, and then we chopped. So both sides had tremendous opportunity to grab the next leg. Neither side took advantage. So if the bulls are ultimately going to win this battle today, 42.40 on the September contract, off we go. The upper Bollinger Band on September daily chart in September, 42.57. Okay, so I know the roll from one contract into the other can be a little bit confusing. That's why I wanted to talk about it this morning. I hope I haven't confused you further. Play this back a couple of times if you need to, and we'll see how this plays out today. But the ball's in the Bulls' court to take this from 40 up to 60, and we'll see how we close. I really think the Bears need news to take it down and keep it down. All right, everybody have a fantastic day, fantastic weekend. Be safe, be healthy, take care, trade them well. Check out the room, Facebook, Reddit, YouTube. Come check us out. Any questions, always ask. Trade them well. Talk to you Monday. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.